You have started your exit planning process, but what does the dream exit planning team look like? Dream exit planning team, that's a mouthful. In this video, I'm going to talk about some of the key specialists that we want to attract, how to decide on the timing, when to invite them to join the process, and how to figure out whether all these extra expenses justify themselves. The right exit planning team can really make the difference in the process, which is why it is essential that the team composition is right. Let's start with the exit planning specialist. As you would already know from the exit planning video, a professional exit planner is usually at the center of your exit planning team. Selling the business is just one part of the exit planning process. The whole process needs to be overseen by someone who understands the exit planning process and also can recommend the right specialists. We're just beginning to put our exit planning orchestra together, so the conductor of that orchestra really matters. A good exit planner will assess your business in terms of the value that's already there that needs to be protected and any areas that need to be de-risked. After that, based off all of the above, determine who are the first specialists that need to be brought in to help you address all of these areas. Some exit planners can also be specialists in their own areas. For example, I'm also a marketing specialist and I have set up operational systems to help improve efficiencies in different businesses. Our team at Celestus also has experience with building AI automation tools to help the businesses capture more value. Another exit planner might be an experienced accountant. Someone else may be an ex-CFO. But the main point here is that it needs to be someone who can organize a team of specialists around you and your business and have this bird's eye view of the exit planning process. I would normally start by getting an accountant on the team. An accountant can help you prepare directors' accounts, assess the financial performance of your company, and highlight any red flags when it comes to your P&L. An accountant who also has an understanding of some of the valuation methods could be a great asset because you're combining two in one. Now, most accountants that businesses employ usually can do some of the basics very well. They can submit your returns, put the company's accounts together, and in some cases advise you on some of your tax options. However, I have come across also some accountants where they've become a major obstacle in the exit planning process. They don't reply on time, they do the bare minimum, and they simply don't engage in our process and they don't want to work towards that one goal. And you know, when you have the right accountant, when they are engaged and on board with achieving our goal, which is building more value in your business, without that and the relevant expertise, it just doesn't work. So it's very important to get the right accountant on board. And one other thing that I mentioned was taxes. A tax specialist is an absolute must in this process. What happens when you receive the payment for your business, when you sell? The taxman will come knocking on your door. What about your current lifestyle? Are you paying yourself a full salary out of the business? Are you employing anyone from your family? How much will you pay in tax if you realize some of your biggest assets? This is where a financial or wealth planner comes into the picture. The specialists are usually well versed on how to help you maximize your personal wealth, which is usually intertwined very closely with your business. Because remember, personal and business goals here go hand in hand in the exit planning process. So the right financial planning specialist would be my next call. And they, in some cases, would work closely with the accountant, depending on where each of their expertise lies. So we've got a financial planner and an accountant on board. Good. The next person I would normally invite to join the team would be a lawyer. Now, let me just make something very clear. When I say that I'm inviting someone to join the team, that doesn't mean that they join the business full-time or stay on a permanent retainer. It could be in some cases 3 or 4 consultations and a one-off fee that is paid based on the advice that is required. They're joining the team as a specialist that we can turn to at any point along the way because the exit planning journey in some cases can take years and at different stages will require different expertise. So, as I mentioned before, we need a lawyer. A lot of businesses are usually not very well de-risked when it comes to their contracts. IP and other legal areas that could be improved should be addressed as soon as possible. Every single one of those boxes that we tick adds to your intangible assets, and in turn that adds the value to the business. A good legal professional here then becomes invaluable. There are of course other considerations depending on what your business needs at the moment. For example, there's something called a fractional CFO. This specialist usually provides long-term financial strategy advice for your business without you having to employ someone as a full-time CFO. In some cases, you, as a business owner, would opt into an exit option called EOT, which stands for Employee Ownership Trust. This is a good option to allow your employees to become part owners of the business when you sell, and for you to cash out using one of the most tax advantageous models. Now, you may be listening to all this and thinking,
bloody hell, that's going to be an expensive team.
But remember what I said earlier, you're not always paying everyone a monthly retainer. Also, within the exit planning, we consistently assess the investment versus the value that we get at the end of the process. What is the value each professional brings to the table? For example, let's take a lawyer. That lawyer drafts up better employment contracts for you and a better shareholders agreement. Let's say, a hypothetical number, they charge you about 2 to 3K for it. But now, any buyer looking at your business will see that A, you have addressed potential employment disputes in the future, and B, it is clear what will happen post-sale with other shareholders, and they won't have to deal with all those headaches. Even more so, they won't have to pay someone else to draft new contracts. Not only does that increase the value of your business by potentially thousands of pounds, but also it gives the buyer the confidence to go ahead and conclude the deal. It's a worthwhile investment, right? When you get closer to the selling stage, you need an experienced M&A firm or broker to help you sell the business. That would be something an exit planner can do themselves, or they will bring in a trusted professional. With the brokers, it is crucial that you go with someone who has a track record in the industry, but also someone who can actually find a buyer for you. I have mentioned this before, and I will say it again. It needs to be someone who understands the different intricacies of selling a business, your industry, and someone who can find serious buyers and be able to talk their language with them. That is because there are unfortunately brokers who will tell you fairy tales about your valuation to try and get you tied into a contract, and then they will barely move a muscle to help you sell the business. But you do need them. On the other end of the spectrum, there are buyers who will try to pay you less than what your business is actually worth, and you need to be able to justify the value. There are a lot of bad actors in the world of M&A, and in the next video, I will share with you some really nasty stories that I have come across before. So make sure to subscribe, hit that bell button to get notified about new videos, and I will see you next time.